Hello traders and welcome to another video review. Today is Wednesday, June 10th, 2026. Let's take a look. What do we have on the economic calendar for today? As you can see, the economic calendar for today is quite full with very important data releases, but most of them are during the US session. So we start with the core CPI and CPI data from the USA. The market participants expect the CPI and core CPI to decrease from 0.4 to 0.3 or 0.6 to 0.5%. The general CPI, however, should increase from 3.8% to 4.2% on yearly basis. Bank of Canada interest rate decision will take place at 3:45 p.m. and the Bank of Canada is expected to keep the interest rate at the level of 2.25%. At 4:30, we got crude oil inventories from the USA, and this is the last important high volatility causing event that might happen today, that will happen today. So please stay focused, stay vigilant during the news release hour, and as usual, stay focused 15, 20, half hour, 1 hour after the news release, because the volatility might increase substantially. So that's about the high important data release for today. Now let's switch to the technical part, and we start as usual with euro dollar. Euro dollar 4-hour time frame chart got rejected from the low of the wave B at 1.1578. So as expected, bearish and engulfing pattern was made. Look at this situation here. We got three wave movement to the upside. From the lows of 1.1501, we went towards this local high, pullback, another local high. So ABC to the upside, clear bearish engulfing pattern, and then consolidation, a little bit of the pullback. Look at this, we hit the extremely oversold conditions, 28 points, and then we hit the level of 50. So that's why the situation is getting very interesting, as the bearish structure is developing as expected. What do we expect? The wave Y to the downside to unfold in the coming days. British pound, almost the same situation. ABC to the upside and local high hits the technical resistance 1.3407. Rejection, bearish engulfing pattern, movement from the extremely oversold conditions to the extremely overbought conditions. Now the pullback is being continued to the upside. Nevertheless, the key level here is still located here at 1.3406. That level is not being really respected anymore. Let me just move it somewhere else. Maybe I should move it here. Yes, I will move it here. Let me just take my magnet so we know exactly to the pip where we are. There you go. 1.3366. Let's take a look at another pair. We are going to take a look at the US dollar versus the Japanese yen. Slowly and steadily, step by step, with dips are being bought. US dollar versus the Japanese yen market on 4-hour time frame chart has been moving towards the 160.45 and hit this level yesterday. Look at this, we went as high as 116.45. so that level here will now act as the technical support, 160.04. so we changed the color, and now we got the situation when we got into the very aggressive selling area. So this is the supply zone, 160.45, and the swing high is 160.73. so this is the supply zone. Let me just pastel there you go, the rectangle. So I will make it red, obviously, so we know that we stay on the same page, and this is definitely some sort of the supply zone. The price reacts very aggressively, very strongly from this zone, and moves down very quickly. Little bit of the pullback, another smash to the downside. Then it takes only 1 day. Oh no, it takes only 5 days to move it here, and it takes, look at how much time to move it back on this level. So the ease of move is to the downside from that level. So please consider this in your trading. Gold with the new low. We broke below 4,266 and a new low was made at 4,173. As we keep moving lower, according to our plan, everything is going as it's supposed to go. We are moving lower. Wave W is done, wave X is done. Now we are developing wave Y, just as on the euro dollar and just as it is on the cable, despite the fact that those are completely different market. Nevertheless, the quotation is still in US dollar. Next target is the low of the wave W, which is $4,098, and that might be hit very, very quickly as we entering the extremely oversold conditions. Please notice the situation and have it in mind, because as you can see in the background, back in even 2024, there is a clear uptrend with low volatility here. Look, this is like low volatility, maybe some kind of a medium volatility. Look at this. That's the high volatility area here after we hit the 4,380. Yeah, but look at this situation here. This is completely different situation. This is completely different cycle with very, very big volatility. Very, very big volatility. High volatility means that the correction might be deeper than you think, right? Please have it in mind. For now, in my opinion, according to technical analysis and yield wave analysis, the downside movement of a complex WXY cycle has not been completed yet. S&P 500 continues to move lower. On a daily time frame chart, we have very interesting bar here. They don't know what to do. They don't want to go up. They don't want to go down. Let me just switch to the 4-hour time frame chart. First we go down, then we go up. So we got rejected from the supply zone yet again. 7,491 lowest level of the supply zone. Rejection, big rejection towards 7,257, a little bit of the upward movement, and then successfully we tested the technical support at 7,316, 7,274. Local low was made a little bit below that technical support, so we took the liquidity out from this below this support. Nevertheless, this is the very weak spot. We have bullish divergence. We have a bullish divergence on a 4-hour time frame chart on S&P 500. Where is my arrow? There you go. This is the low. This is the lowest lower low. No. And this is the low on the RSI, and this is the higher low. Clear short-term bullish divergence. We should see more whipsaw trading conditions, more push to the upside, more pullbacks. Nevertheless, when this divergence is done, we should return to the pullback continuation to the downside. Crude oil finally closes the gap, fills the gap. The retail gap has been filled, yes, almost to the pip. As expected, blue rectangle is now completed. We might remove it from our chart. The retail gap has been filled. Nevertheless, the bears don't stop. They don't surrender. We should see sooner or later the test of the lows from the April 17, which is 80.46. Only a sustained breakout above this local high at 96.97 would invalidate this scenario. Negative RSI and negative momentum supports the bearish outlook in the short term for the crude oil. And last but not least, the Bitcoin. Bitcoin is weak. Bears are in charge of this market, and we should see sooner or later breakout below the 60,000 for good. For now, we just have the pin bar here to took out the liquidity and stops below the level of 60,000. Then we go back higher towards 64,200, and now we come back to the downtrend as we reverse from the neutral level of 50.53 was the local high. So please consider the situation when we will definitely break below this level, and the next area of interest for the bears and bulls is located roughly around 53,000 on the Bitcoin. There is no sign that this aggressive downside movement is about to complete or reverse. So still on a Bitcoin, bears are in charge of the market and lower levels are expected. That's everything from me for today. Thank you very much for watching this analysis, and I hope I see you guys next time. Take care and bye bye.